What is going on, guys? In today's video, I'm going to go over my top 5 stocks on what I like to use for the covered call strategy or the wheel strategy. So with that being said, I want to jump right into this video. Cue the intro.
I know I'm fine, but the money
Okay, guys, sorry if I do sound a little bit sick. I'm not feeling too good right now, but I want to get this video because I think this one's pretty important. So I'm going to start out with the cheapest stock, and they're not in any particular, like, which one's my favorite ever. I'm just going to go through the cheapest one first. The cheapest one is SoFi. So the first thing you guys know I like to do is, and I'm going to actually show you how you can just look these up if you're at work on a company computer or anything like that, how you can actually look at these. So first thing we're going to go to is Yahoo, and anybody can do this, and I think this is super easy, and that's why I like doing this. SoFi, we want, oh no, we need to go back to Yahoo Finance. I do apologize. And I'm showing you guys exactly how I would do it, and how sometimes, you know, if I have Thinkorswim mobile, so I always look at my phone. But SoFi is one that they don't have a lot of overhead in buildings and things like that. It's all over the market, or all online. So it is one that I actually do like. And over here on the side, sometimes it's up over here, but this one is over here. All you gotta do is click straddle, and then you can choose your date as well. So this is one though that you're not gonna have to have a lot of capital on, but you can sell consistently. I'm not against SoFi. Again, if we look at the overall market on this one, they obviously did do extremely. They were extremely higher about a year ago. But you know, I do think SoFi is going to do better as we go on. So SoFi is one that I'm not against, but you have to truly believe in this company. So do your research before you do it, because you guys know the number one rule I have, if you're one of my watchers, is for the wheel strategy is you have to want to own this company. That is a big part of it, because sometimes you will have to start reducing your cost basis by selling covered calls, and it got to be something that you're willing to, you know, hold on to, or what they call bag hold, for a little bit if the stock does go down. And if the overall market goes down, it's the same thing if you do this on SPY, QQQ, or SoFi. But I do like SoFi. It's $8.38. Again, we can go into options. You can use SoFi options over here as well. I like to just show you both. I would go out the next week. Again, I would do SoFi probably weekly. That's just because I do think that it does move enough that I don't know where I'm going to get stuck bag holding on this one, and I don't feel like getting 45 days out. And I'm going to show you the difference here. I think that's really what I wanted to do here, is show you just the difference here. I'm not looking to make a fortune off this, but even 45 days out of $5 is only $6. I don't love that trade. But again, if we go 8 days out to next Friday, you know, I can get $5 for $7.50. It's not my favorite trade, but it's a trade that I think that I can win at, and I'm willing to buy SoFi up here at 7.5. I do think that it seems to be a median kind of range around here, and the lowest that it dipped to was around that 650 this past year. I'll be able to move a little bit. Now, overall past year, it did come down even further. Again, that's why this one is a little bit worried. You have to want to own a bank in order for this one to work. So we took up a lot of time here on SoFi. My next one is going to be actually a pretty crowd favorite, believe it or not. PLTR. Everybody seems to love this one. I've made videos on this one. I'm not against this one at all. You guys can see I have some lines on here from where I have traded it in the past. I think that this is a good one. I do think that PLTR will go up over the long term. I'm not playing this one a ton. I only play weeklies. Again, I only play weeklies on this one. That's just me. So if I'm going PLTR, I'm going over here. And again, it switches back every single time. That's why I don't like this right here. I want to be able to see it. So if we go to PLTR, we see the options, but this is how a real chain looks, guys. If you guys aren't trading on Robinhood, you guys know this, Thinkorswim, TD Ameritrade. This is how a real chain looks. But again, you're not going to get a ton of premium for the date. So you're going to have a close, really, trade here. But PLTR is another one that has climbed down off of some bad news. But I do think that it has the possibility of jumping back up, and it has been uptrending. But again, look at the overall on this trade. You have to really want it. It is a technology information company with government contracts. So just buyer be aware on this one. And yes, I have taken trades on all of these, just so you guys know. My next one is actually one of Warren Buffett's favorites. Is TQQQ, or no, this one's not Warren Buffett's favorite. This is just one of mine that I've done. It's the same thing, but it is a leveraged fund. I do apologize. This is a leveraged fund that transfers the Qs. It literally just follows the Qs, which is the NASDAQ ETF. So you guys can see it's not fantastic, but it's here. It's had a really rough beginning of this year. But now we're going to go to one of Warren Buffett's absolutely favorites. And this one I've actually done very, very well on. I've actually never had to own the shares on these. But KO, Coca-Cola. And it's a consumer staple. So it's one of those that, people are going to transfer into as. And again, overall in this company just goes up over time. But again, this is one that people will get out of tech stocks and file into these consumer staples. So that is one. Again, they are not huge on premiums. So I missed it. See that? I don't want Kohl's. I definitely am not running this on Kohl's, just so you guys know. This is, again, you're not getting a ton here, but again, I'm going out to next week. I did run these on the weeklies, and you're not getting a lot on these. I'm doing one out of the money on the puts, and I was getting about 25, so this one is actually about correct. This one looks like you're getting about $20 per week for $5,900. Again, it's not a fantastic return on capital, but it is one if you get put the stock, and now you own it at 59, you can sell at 60 for about $42. And it's not a fantastic one. Again, not a fantastic one, but it is a consistent one, and I do believe Coca-Cola is not going anywhere. I think we can all agree on that one. So the other one, these other two, though, are basically in the exact same industry. So one is just slightly higher than the other one. This is Southern Company. These are utilities. This is another stock and I want to go over here, and I want to show you this in the long term, because I think this is pretty important. I've owned shares of this company for years now. I love this company. It is a utility company and deals in electricity, but it has done nothing but just go up over time, and it pays consistent dividends, and I've got no problem whatsoever. But again, we want to show both sides of the market. And again, I think knowing both sides of the market is very, very important, just because if you do get put the stock, you know how to react to it. So again, you're not looking at a lot here. On this one, $43 for a week, and then on the call side, if you get put the stock, you're looking at about $90. I'm gonna round down on here and say $90. So I don't think that that's bad. I think you're gonna do all right for the year on this one, as long as the whole market doesn't just dramatically fall like a COVID or something like that. Now, why am I looking at stocks like Southern Company? Again, the whole market has not done well this year. So it's one of those thoughts where I like the company. It's consistent income. It does very, very well. It's very profitable. And it will be able, it's one of those stocks that it's a utility. People are going to turn to it when they want to get out of technology and stuff like that. That's a little bit more volatile and that has consistent dividends. So this is just one of those stocks that I consider a dividend stock that I want to hold forever, that will go up in value, and they're great. And everybody pays their utility bill every single month. Well, most people. Let me rephrase that. Most people. And then the last one is one that is very, very similar. It is literally just the northern competitor in the Midwest. And the last one is Southern, like Georgia and things like that. Duke Energy. I used to pay Duke Energy every single month living in Indiana. This is the exact same deal. It's a little bit more profitable than Southern Company, but it's the exact same deal. I must not have clicked on the right one. But you will see they have dips and stuff like that. They do move, but over time, they just consistently go up. It's one that you can bag hold for a while. And here is the game plan, worst case scenario for all of you guys that don't know. Duke Energy, I'm going to go, if I'm underwater on this, I'm going to go out here. I'm going to go sell, and I'm going to go sell a call. And I'm going to have to go find one that is out of the money. And you can go $5, $10 out here. And again, worst case scenario, you need to go further, guys. And you can get out here to $110. And then where's the 110? That's pretty far up there, to be 100% honest with you. You are getting a little bit further out in dates, 106 days. I don't like those, but you can do it. This is 105. Guys, this stock doesn't move quite that much. So no matter what, you can gain an extra $25 basically dividend a month off of this one. It's not a dividend. It is considered income. So that is the tax difference. I'm not a CPA. I'm not a tax professional whatsoever. Definitely do your research on that. But I want to show you guys the difference on this one as well. Again, see both sides of the market. I think I want everybody to see that in this market. This is an actual option chain. I use Robinhood because everybody else seems to trade on Robinhood. I personally don't, but I know how to use it. This one is a stock that, again, I have owned. I have done this exact strategy on both these companies because I've owned lots of shares of them, and I like them. I really do like both these companies. I think that they're great. Duke Energy is probably slightly a little bit more than Southern Company, but Southern Company is a little bit cheaper, so maybe you don't have that money for Duke Energy. Maybe you can do Southern Company. These aren't ones that, I'm doing credit spreads on whatsoever. These are ones that I'm only doing it if I have the cash to buy the stock. I think that is a key point in this. These are companies that I want to own long term, and I'm only doing it if I want to own the stock. So that being said, guys, those are my top 5 stocks to run the wheel strategy on here in 2024 so far, with a market that we are not sure in which direction is going to go. I hope this helps somebody in this video, and I can't wait to see you guys in the next one.